Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Priced in means we don't want to explain it. Liquidity solves problems the way duct tape fixes engines. Politics is where simple problems go to become symbolic. Productivity advice works best for people who don't need it. Tail risks are invisible until they're the only thing you can see.
Nifty 500 profits just grew 15% year on year, the strongest in 5 quarters. Nearly half the index delivered 15% plus PAT growth. At the same time, the upgrade to downgrade ratio is quietly turning up, suggesting analyst pessimism is easing, not worsening. So why the sudden earnings slowdown chatter? Simple. Narratives are moving faster than numbers, especially during volatile markets. When prices fall, stories darken. When prices rise, the same data suddenly looks resilient. Earnings aren't collapsing, expectations are being repriced. Follow the money and you will see sport morph into media. The 90s paid champions for performance, the 2000s paid icons for dominance. The 2010s and 2020s pay platforms, global audiences, sponsorship gravity and social reach. Boxing spikes came from one night economics, golf from brand longevity, football from year-round monetization. Today's biggest paydays aren't about trophies alone, they're about owning attention at scale. Athletes did not just get fitter, they got financialized. As Charlie Munger said, show me the incentives and I will show you the outcome. India pulled in $58 billion of FDI over the last year, up 10% year on year, but still well short of the $72 billion peak from 2021. Recovery is real, just not spectacular. What's different this time is composition. Data centers, manufacturing and digital infrastructure, slower money but stickier money. If even a chunk of announced projects convert from press releases to pouring concrete, inflows won't just rise, they will last longer. The US still dominates global tourism earnings, but the real standouts are Thailand, UAE, Japan and Spain. Countries that turn visas, airports and branding into export engines. India isn't dramatically behind China on paper, but once you adjust for population and GDP, the gap is obvious. Add Hong Kong and Macau, and China pulls far ahead. Tourism is low capex, job heavy and FX friendly, yet India treats it like a side business. The upside is massive, but it needs execution and not just incredible slogans. Japan was a textbook for rates can stay low forever. Now 2-year rates priced 2 years forward are rising. The yen is sliding and inflation is still behaving. That's a problem. Markets aren't reacting to today's inflation, they're pricing credibility, currency risk and exit costs. Monetary sovereignty buys time, not immunity. When investors start demanding compensation for duration and FX risk, theory meets term premium. Turns out even free lunches come with a bill, just later. Markets can ignore theory longer than theory can ignore markets. This is not my opinion, just the facts. Gold loves drama, especially near the top. History is blunt. Parabolic moves feel unstoppable, then gravity shows up. 1980 gave up 40 to 60%, 2011 lost 43%, 2020 corrected less in price, more in time. This pattern isn't prophecy, it's behavior. When fear turns vertical, mean reversion clocks in. Gold still protects wealth over cycles, just not emotions at extremes. Strong rallies usually need digestion. Sometimes that's a pullback. Sometimes it's years of boredom. The oil leaderboard looks crowded, but control is anything but. The US leads the pack on sheer volume, Saudi Arabia still holds a swing vote, and Russia keeps pumping through sanctions like it misplaced a memo. Everyone else, price takers and not price makers. The real takeaway isn't who produces most, it's who can change production without breaking a sweat. In today's market, oil prices aren't set by barrels alone, but by spare capacity, geopolitics, and who can afford to wait. Production shows muscle, flexibility shows power.